Good afternoon, everyone. Welcome back to this discussion on audit. So, in the previous session, we discussed a very important area that was about advances, right? Now, as regards advances, we looked at the financial statements of a bank, and therein you would have understood. So, when it comes to the advances, so that's a very important area. And in fact, in relation to the financial statements, we also saw that whenever it comes to a bank, so advance will be a significant chunk in the balance sheet. So if you look at the proportion of the total assets, advance will always be a major proportion, be it any bank. Okay, so that was again not specific to the particular bank we looked at. And there was also a reason behind that. And the reason was all about the nature of the business. Yes or no? Now, in relation to that particular bank, we also looked at various compliances which the advances need to go through. Why? Because when the regulations are quite significant in relation to a bank, then of course the component of the bank, or you can say its major stream, will only be impacted, will be subject to all of those regulations. Yeah. Further, we also discussed that when it comes to the advances and when it comes to the presentation of those advances in the balance sheet, in the financial statements. So there again, we have various disclosure requirements. Yeah, we have various disclosure requirements. There are different ways we need to look into. And as an auditor, it becomes important for us to understand all of those classification, all of those requirements related to the disclosures. Why? Because on the basis of such understanding in relation to the advances, or you can say on the basis of such spread out of the advances for that particular bank, auditor will be able to design his or audit procedures. Yeah. Otherwise, we also understood that some types, okay, some areas, or you can say some advances belonging to a particular category may get missed out. Or even if they may not be covered to the extent the auditor would have liked that, which is all about under audit. And the moment we say it's all about under audit, that can be quite a difficult situation for the auditor. Why? Because it may lead to some sort of misstatements, which of course are going to be material. Why? Because the area is so significant. At the same time, uh, this is not something which the auditor will be able to justify later on. Why? Because if the auditor is not diligent enough, then the explanations may not be appropriate on the part of the auditor. Correct? Now, in relation to those classifications, so there are different classifications, if you remember, that we looked at for the advances. Can you just help me understand what were those classifications? What are the various ways through which advances could be presented in the financial statements? And also, if you can just help me understand whether those presentation requirements are mandatory or optional. Can that be changed depending on the bank to bank? Or you think, no, it's something which is quite standardized. So every bank will have to follow such requirements. Okay. So over to you. Any thoughts that you may like to share on this aspect? Over to you. Quickly. Over to you. Any thoughts that you may have on this? On the advances, on their classification? What do you understand about those classifications? How is that really relevant? Is that mandatory or optional? Do you see that varying from bank to bank? Quickly, let's think about it and help me understand with some of those points. Quickly, yeah? Okay, great. I can see this response from Tanu. Tanu is saying there are four categories: standard, substandard, doubtful, loss assets. Rihanna is saying RBI prescribed the standardized forms. Okay, so the moment you say standardized forms, they become mandatory. Yeah, because it's prescribed by the regulator. Then Rihanna has also given some classification criteria. It's about sector wise, security wise, and on the basis of prudential norms. Tanu says it's prescribed by RBI. Okay, so I'm assuming that if you are saying it's prescribed by RBI, so you mean to say that this is something which is going to be mandatory. Correct? Yeah. Okay, so now, as regards those classification criteria, they are very important. So just make sure you flip through that. You have at least some basic understanding of those classification criteria. Why? Because if let's suppose you have questions around the audit of advances. Okay. So in such a case, some of those classification criterias, or you can say those classifications, will help you quite a lot to design your audit procedures. Because the more and more pointers you will have, you will be able to design the audit procedures. But if you remember only one word, advances, then your procedures are again going to be limited. Okay, just think about it. Let's suppose if you understand sector wise, it can be done. Okay, so immediately an audit procedure you can think of. If you say security wise, you can always think about the audit procedures in relation to the securities which are attached to them. Yes or no? So it's all about having more thoughts, or you can say remembering more points that you need to consider for the purposes of audit requirements. Okay? Yeah. Now, moving further, let's now try to understand as to what is required to be done in relation to advances. Okay, so for that we discussed that audit procedures will have to be looked into. Yeah, so there are going to be certain audit procedures one will have to apply for audit of advances. Okay, and there are a lot of procedures that we thought about. So can you just help me understand as regards advances, what are going to be the audit procedures? So maybe you can just help me with 3 or 4 audit procedures, everyone. Yeah, quite simple, easy for you to answer quickly. What are going to be the audit procedures in relation to advances? Over to you, quickly. So when it comes to the advances, what are going to be the audit procedures? Tell me quickly. Over to you, waiting for a response. What are going to be the audit procedures when it comes to the advances? Okay, great. I can see this response coming from Shreya. Okay, but this is all generic. Huh? She's saying one is the sample basis you can consider. Okay. What else? What are going to be the audit procedures? Tanu says audit plan. Very good. Control environment. Very good. So now in relation to the audit procedures, we also discussed that you need not be too technical. Okay, so every time you don't need to think about a lot of audit procedures which are going to be very, very technical. Okay, for example, if you look at the screen, yeah, So on the screen, there are a lot of points related to audit. Can you see this or not? And all of these points we have discussed. And while discussing all of these points, we also discussed that these are quite generic. Why? Because they will apply to almost every other entity. Yeah. So therein also you can just look at some of the common points. What are going to be the common points? Identification, assessment of risk of material misstatement. Okay, understanding the process. Now we are talking about advances. So understanding the process, internal controls, accounting process in relation to advances. Okay, risk management process. There again you have further points. Yeah. So this way you can just design so many audit procedures. Correct. At the same time, you can also have some specific audit procedures, like the one which is now there on the screen. Correct. Further, when it comes to the advance, some of the important audit procedures will always be the checking of the underlying documents, which has to be the agreement. Okay. So advances are all about agreements. So in relation to the advances, agreements are required to be reviewed. Because that will give you the understanding as to what are the terms and conditions which are involved, what are the compliances which are involved. Okay, many a times some compliances are attached to the agreements. They are given in the terms and conditions. So that's how you get to know about it. Further, in relation to the advances, we also discussed that there are some RBI norms in relation to their classification, in relation to their income recognition. Because the income which the bank will generate will be from advances only. Yes or no? That's the core business. That's the core activity for a bank. So that's why all of those points will automatically get linked to the advances. And whenever you think of the audit procedures, just keep all of these points in your mind. Yes or no? Yeah. So Tanu says engagement team discussions. Yes, of course. In relation to various audit procedures, in relation to the audit planning, one can say. Rihanna says, should we also be looking at the confirmations, agreements for the advances? Yes, which is fair, right? Which is a fair thing to be looked at. Okay. Now, in relation to advances, I think we looked at various points in the previous session. So I'll not really be duplicating on all of those points once again. But as regards advances, there is another very important concept, I think, which we need to now discuss, and that is about drawing power. Okay, that's in relation to the drawing power. So let's try to understand as to what is this drawing power. How is this really relevant? And then I think it also involves some sort of calculations. Okay, that is going to help you. So we'll also be looking at those calculations. Fine. Now this is the classification criteria. You can just flip through this. Okay. So even if you just flip through this, I think you get a fair idea. Correct? All right. So now moving on to this concept of drawing power. Very popularly, this is called as DP. Maybe if you have dealt with some of the banks, if you have some understanding in relation to the borrowings, you may be knowing about it, or you may have at least heard about it. DP. It's a very common term which is used in the context of borrowings. Now, what is this? See, when it comes to a bank, and particularly when it comes to the borrowing, which is in the nature of a working capital loan, yeah, like cash credit limit. Okay, so I think Anil has also looked at this. Yeah, so it's an important concept anyways, huh? Okay. So now, if you look at a bank, now for a bank, please remember borrowing is going to be an asset. Okay. For the other party, borrowing will be a liability. Yeah, so please don't get confused. So that you need to remember, huh? So when it comes to this drawing power, so this is the limit up to which a firm or a company can withdraw from the working capital limit sanctioned. So for example, say a firm has taken a cash credit limit or a facility, let's suppose for 20 crore. Okay, 20 crore. Let's suppose that's the sanctioned limit. Now, one is the limit, means this limit is available to the firm. But there could be a capping on this limit in terms of the amount which the firm can withdraw. See, just by having a limit may not serve the purpose of the firm, because eventually the firm needs money, funds. Yes or no? So if let's suppose the firm says that I have got this limit of 20 crore, but I am not able to draw any fund. So will that be of any use? May not be. Correct. So that is where this drawing power, or you can say this limit, comes into the picture. So how is it different from the sanctioned limit? Sanctioned limit is the total exposure that a bank can take on a particular client for facilities like cash credit, overdraft, export packing credit, non-funded exposures. Whereas drawing power refers to the amount calculated based on some factors on a particular date. Or you can say you are one of the subset of the sanctioned limit happens to be what? Drawing power. Yeah, means it's somewhere lying within that sanctioned limit. So in a sanctioned limit of 20 crore, drawing power could be 15 crore. Means the firm can draw only 15 crore. Now, what are the considerations? All accounts should be kept within both the drawing power and sanctioned limit. See, sanctioned limit automatically, if you keep it within the drawing power, automatically they will remain within the sanctioned limit. Accounts which exceed the sanctioned limit or the drawing power or are against unapproved securities or are otherwise irregular, they need to be reported to the concerned authorities. Now, what are the duties of the banks? Banks should ensure that the drawings in the working capital account are covered by adequacy of current assets. Okay, and therefore, how do you derive this drawing power? It's based on the current stock statement as well as the debtors balances. However, considering the difficulties of large borrower stock statements relied upon the banks for determining drawing power should not be older than 3 months. Okay. Outstanding in the account based on drawing power calculated from stock statements older than 3 months is deemed as irregular. Irregular means which is not appropriate. So that's the term that you use. Okay, and I think you will get more clarity around it once we look into this calculation also. Now, what could be the concern of the auditor here? Stock statements, quarterly returns, or any other statements which are submitted by the firm. Firm means the borrower to the bank. That will become the basis for calculation of drawing power. Okay. So therefore, if that statement is wrong, drawing power may also be wrong. Okay, so that's the basis of that computation. So therefore, this is required to be appropriately looked into. Audited annual report submitted by the borrower should be scrutinized. Monthly stock statement, okay, for which the audited accounts are prepared, submitted, they should be compared and reasons for deviation, if any, should be ascertained. So I'll talk about it as to how do you get into this. I think before that we need to get on to the computation of drawing power. Now, as regards this drawing power, it should be ensured that drawing power is calculated as per the guidelines of that particular bank. Okay. Then there is one more requirement which is in relation to the stock audit. So I'll come to that stock audit slightly later. Okay, because this will be more in the context of drawing power. Yeah. So now, let's first of all understand as to how this drawing power is required to be calculated. So first of all, what do you have? Stocks. So we pick up the stocks. From these, if there are any unpaid stocks, that you will deduct. So what do you mean by unpaid stocks? Sundry creditors, letter of credit acceptances. Okay. So that means the balance of stocks that you get will be the one which has been paid for. So if let's suppose you purchased goods worth of anything against which inventory of 1000 is pending, so you need to find out of these 1000s whether the payments are made. If you say yes, 600, then the balance stock is what? For which the payment is also made by the entity. Okay. Now, for that stock balance which you derive 400, a margin of 25% is again required to be deducted. Margin, you can say a cushion is considered. Okay. Clear? So what do you get? 300. So you can say this is one or first component of the drawing power. Okay, idea is what? You are trying to calculate drawing power. Okay, so this is the first component of the drawing power that you compute. Then you will pick up the debtors. From the debtors, you will pick up any ineligible debtors. Okay, then you get eligible debtors. From that debtors balance, a margin of 40% is required to be considered. Margin, once again, you can say is the cushion which the bank would like to consider. Okay, so thereby you get the balance of debtors or the amount of debtors that will be considered for drawing power. Okay, so there is one amount of stock, there is another amount of debtors that you will consider for drawing power. So in this case, this amount becomes 780. Yeah, so the total summation of these two is 780. So what do you call this 780 as? This 780 will be considered as the drawing power for a bank. Tanu is asking, sir, is this a fixed rate? See, Tanu, if you are talking about this 25%, this 40%, then yes, it's a fixed rate. Okay, clear? Now what I'll do is I'll pick up one question. Then I can see some queries. Okay, so it was only acknowledgement from Tanu. Okay, now what I'll do is I'll pick up one example. Okay. In that example, we will try to calculate this drawing part on the basis of this understanding that we have obtained. And I would suggest that you open your study material if by chance that is not in front of you, because looking at this basis that we have just discussed, you should try to compute this drawing part. Yeah, that will help you get more clarity on the concept of drawing power as well as the computation of drawing power. Okay, so one is the concept, which is going to be more of theoretical, over which we'll have a further discussion once we compute this. Okay, so I'll come back to this once we compute this, because once we compute this, then I think you will get a fair idea as to what this drawing power is. श्रेया is asking, sir, mode of creation of security भी एक बारी clear कर दीजिएगा. So what do you mean by clear? So do you want me to discuss that again? Is it mode of creation? Is it, Shreya? Quickly. Okay. So she's saying yes. Hypothecation, pledge, all of these things. Sure. So what I'll do is I'll discuss that concept about the security in general. Okay. Don't worry. Now there is an example in your study material itself. Okay, so if you can just go to that example. Yeah, so this one. Now in this case, CAP is conducting stock audit of a borrower. Borrower is availing a cash credit facility of 100 lakhs from a branch of a bank. So what does it mean? It means there's a borrowing of 100 lakhs. Correct? Cash credit facility is against security of paid stocks and debtors up to 90 days. Now this part is very important. Yeah, so there are a couple of points which you need to understand before you get into the calculation. So if you are just getting into the computation, please bold that for some time. I have a question for you. Okay, so we are told in the given question that the borrower has taken this loan, and while taking the loan, he has given some security. Okay, borrower has given some security to the bank. So there are two securities which the borrower has given. What are that? First, paid stocks. Second, debtors up to 90 days. So can you please explain what is the meaning of this? Over to you. What is the meaning of this? So when you say there is a security of paid stocks, debtors up to 90 days, what does it mean? What does it mean? Quickly. Anyone, quickly. Over to you. What is the meaning of this? Tell me quickly. Tanu says this means that both of them are the primary securities. Can you elaborate this? When you say it's a primary or secondary, what does it mean? What does it imply? Tell me quickly. What does it mean? What does it imply? Over to you. Any thoughts? We discussed this. Okay, so let's try to understand this once again. Huh? Say, for example, you approach a bank. Let's suppose there's a bank and you are A Limited. Okay. Now, A Limited is looking for a loan of 100 lakhs. Correct? Now, generally, bank may not want to give a loan to A Limited. Why? Because if the loan is given, so bank will have a concern. So what is going to be the concern on the part of the bank? Tell me, what could be the concern on the part of the bank? If let's suppose somebody reaches out to you and asks for a loan, so what is going to be your concern? Just think about it and let me know. If let's suppose anybody asks for money from you, so what is going to be your concern? Quickly, Rihanna says whether that will be paid back or not. Shreya says that in case there is a default by the borrower, so there will be a bad debt. Yeah. So exactly same is the concern of the bank as well. So that's why what would bank like to do? So there is a risk which is attached to this, but bank has this business. So bank can't say no. Otherwise, how will the bank run? How will it function? Okay. So therefore, bank would like to cover this risk. Yeah. So bank has a concern. Now there are two ways through which this concern can be addressed. Say if this loan is taken for 5 years. Yeah. So if this loan is taken for, let's suppose, 5 years, either A Limited should be able to give the comfort to the bank that over the period of next 5 years, 1, 2, 3, 4, 5, A Limited will be able to generate sufficient profits. Yes or no? Each year. So that A Limited will be able to repay. Yeah. So that ability should be there on the part of A Limited. So one is the intent, second is the ability. So we can just ignore the intent for the time being because you can't know the intent. But ability you can always check. So how do you check that? Through the past profits. Okay. And of course, through the projections. So this will show the ability. Okay. So through this, bank will get to know about the ability of A Limited, whether A will be able to repay the money or not. Yes or no? Yeah. So this is a very, very important part. Second, if let's suppose bank is not very comfortable, or even if bank becomes comfortable, any person would like to get some more comfort or not. So how do you get that additional comfort? You get that additional comfort through some security. Let's suppose you have a friend. Your friend is asking for money. Okay. And you do not trust. Trust in the sense you know that he may not be able to repay. Okay, so it's not about intent. So you think, what if he doesn't make the payment? Okay, what if he doesn't repay that amount? And the amount is quite big. Okay, so we are not talking about some 500 rupees, 100 or 1000 or 2000. Let's suppose the amount is too big. So you'll have a concern that will he be able to repay? So you'll check, you'll say that how will you repay? So he'll say that I've got good profits, I have a business, and see my business is generating profits over the next 5 years, 7 years. This is how I'll generate the profits and I'll pay you. Okay, so this will give you some level of comfort. But if let's suppose that person gives you some asset, okay, let's suppose he says that this is my car, okay, you keep that car with you, okay, and I'll take back my car once I repay the loan. Or let's suppose I keep my car as a security. In case I am unable to repay the loan, you can take my car, or maybe my home, or maybe some other asset. So, will that give you some additional comfort or not? Tell me, will that give you some additional comfort or not? Yes or no? Yeah. Now, bank being in the business of lending, so bank needs this comfort because every day bank has to deal with hundreds of such customers. So that's why what would the bank need? Bank would need some security. Correct? Bank would need some security. Okay. Now, as regards this security, let's try to understand some important points. Now, bank is looking at a loan of 100 lakhs. Now, if let's suppose the party gives a security, but the value of the security is only 40 lakhs. Okay. Value of the security is what? 40 lakhs. So in such a case, bank will get the comfort for 40 lakhs. But what about balance 60 lakhs? That's the problem. Yes or no? That's a problem. Tell me, what about 60 lakhs? Will that be a concern to the bank? And the concern will be of similar nature because the way the concern was there for 100, the same way concern will be there for 60 also. Correct? So that's why what the bank would always like to do is against this loan of 100 lakhs, okay, bank would like to keep a security of 140 lakhs. So you may be thinking, sir, how will that happen? Let's understand. See, let's suppose the other party gives a security of 100 lakhs. Okay. Let's suppose the other party is giving a security of 100 lakhs. And the bank says, okay, I'm accepting this security of 100 lakhs, but I'll keep a margin. Okay. Maybe the value of your security goes down in future. So what will I do? So that's why the bank says that I'll keep a margin. Okay. So I'll keep this value, or I'll consider the value of your security as 75 lakhs. So the other party says no problem. And the bank further says that because your security value is 75 lakhs, so that's why I'll restrict your loan amount also to 75 lakhs. So thereby, what will happen? Thereby, what will happen? Actually, if you look at the security, this is 100 lakhs. Yes or no? Actually, if you look at the security, this is 100 lakhs. Yes or no? See, the bank has discounted that. But if you look at the value, it's 100 lakhs. And against this 100 lakhs, bank has given only 75. Yes or no? Bank has given only 75. Yeah. So that's how bank is keeping itself more secure. Correct? So that's how bank is keeping itself more secure. Yes or no? Yeah. Now this is exactly the same thing which you get to see in the drawing par calculation also. Okay. So all of these margins, okay, these terms that we use for margins, what are these? These margins are nothing but the cushions like this. So you can say this is the cushion which the bank has maintained with itself. So that tomorrow, if the value of the security goes down, still the bank remains protected. Now you may be thinking, but sir, the value of security can go down further. That's true. But somewhere the bank will have to draw the line. Yes or no? Yeah. So at least some comfort, some line bank will draw, and that's how bank will compute its margin. Okay. Are you clear as to what is a margin? Why is this margin kept? How does it really help the bank? Everyone clear? Clear? Yeah? Clear on this? Okay. Now, let's also try to understand alongside about the sanctioned limit and the drawing par. Now, let's suppose your sanctioned limit is 20 crore. Okay. So the bank may say that the other party will get a sanctioned limit of 20 crore. But DP amount comes out to 15 crore. So now what will happen? Other party will be able to draw only 15 crore. Yeah. So effectively for the bank, what is at stake? This 15 crore is at stake. Or you can say this is the amount over which there is a risk. And for this risk of 15 crore, we just discussed, what will the bank do? Bank will keep a security. Bank will keep a security. Yeah. And the value of that security will always be higher. Yeah. So you can say this is the loan amount, but this is the value of security which is going to be there. So clear on the sanctioned limit, drawing par as to what is this threshold? How does this really help the bank? Clear on this? Everyone? So idea was to just make you understand as to how does this really help the bank. Okay. Now we will go back to that same question. Okay. So in this question, the bank is giving a cash credit facility, and for giving this cash credit facility, for giving this loan, bank has asked the customer for two types of securities. One is paid stock. Why is the paid stock considered? Because if let's suppose there's a stock which is unpaid, so against that unpaid stock, bank understands that the company will also have to pay to the creditors. So if the stock is sold tomorrow, company will have to pay to the creditors. So how will the company make the payment to me? But if the stock is there against which no liability is outstanding, so after selling the stock, the money will come to the bank. Yes or no? Yeah. Similarly, when the bank says security for the debtors up to 90 days, why? Because if the debtors are more than 90 days old, then there is again a risk. Those debtors may not be collected. Yeah, recovery could be an issue for those debtors. Yes or no? Correct. So you can say that these are the ways through which bank is trying to protect itself. Number one, to begin with. Further, even on this paid stock and on these debtors which are only 90 days old, bank is saying it will consider a margin 25% on stock, 40% on debtor. Okay, so bank is again giving itself some more cushion. Understood? So that's how bank is trying to protect itself. Clear? Now, we are given information about this company as on 31st December 2022. Okay. The value of stock was 125 lakhs. We understand in this 125 lakhs, 5 lakhs worth of stock is damaged. Okay. Then we understand debtors were 50 lakhs and the debtors exceeding 90 days were 10 lakhs. Then we understand creditors were 50 lakhs. Okay. And in this case, drawing par is already computed by the chartered accountant. Okay. So it's already calculated 82.5 lakhs. Now you are required to only confirm whether this calculation of drawing par or the amount which is computed of drawing par is correct or not. So I think in a way you are required to recompute this. Yes or no? Because the calculation is not shown. So you only know the outcome. So what will be required on your part to recompute this? So I believe there are two things you have looked at. Okay, let me just go back. So if we go back on this particular sheet, we discussed as to how the drawing par is required to be calculated. That's number one. Number two, if I go back to this question, I understand that most of the criteria which one needs to consider for calculation of drawing par is actually given in the question itself. Okay, so if you read the question carefully, if you try to understand the requirements of the loan or this drawing par carefully, you will find that the complete formula, if you just go logically, some thoughts if you apply, that the complete formula for calculation is given in the question itself. Okay, of course, you can make a reference to the previous calculation basis, but if you don't do that, that will be better. So now, with both these things in place, can you just compute the drawing par and help me understand with the final answer whether this drawing par is correct? If you say yes, very good. If you say no, then what is the drawing par as per your calculation? Over to you. And my request, that is very, very important. Please do not look at the solution. Okay, only then you will be able to understand this concept. If you just look at the solution and then solve it and share the answer, that will not help you. Yeah, because it's not an exam or a test wherein you need to just prove it. Yeah, so quickly, over to you. Just calculate the drawing par and tell me what is the drawing par as per your computation. I think Julie has computed this. So Julie is getting 76.5. Can you just help me with the basis, maybe in a summarized manner, Julie? If you can do that. Anyone else who has computed this? You can share your answer. Over to you. Anyone else who has computed this? Okay, Julie has shared the calculation also. Very good. Rihanna, I think, is also getting the same answer, 76.5. Okay. What about others? Shreya has also solved this, and I think Julie has shared this complete calculation. Okay, that helps. Very good. Okay, Dhanush has also solved this. Very good, Dhanush. Yeah, the important point is you are solving this honestly. Dhanush is getting a different answer. That's 80 lakhs. Okay, important point is not whether your answer is correct or not. Important point is that you are trying to attempt this. And that's how you'll get the clarity on the concept. Okay, Almaz is also getting 76.5 and he has also shared his calculation. All right. What about others? Quickly. See, it's an important area. Yeah. Okay, so shall we go to the solution? Okay. So let's look at the solution. Now, question says drawing par. So drawing par, we understand we need to look at two things. One is the value of stocks that will be used for drawing par. Second is value of debtors that will be used for drawing par. So the question says only paid stock should be considered. Correct? So what is the total value of stock? 125. From this, damaged stock, can we keep? No. So reduce that. Okay. Further, we also need to reduce the unpaid stock. Unpaid means any vendor balance. So what do you get? 70 lakhs. Okay. Further, it says that against the value of the stock, 25% margin needs to be kept. So that means in relation to the stock, the drawing par that you can keep will be 52.5 lakhs. Okay, so that's one. Yeah, that's one. Next. In fact, if you look at this calculation, okay, this entire basis is available in the question itself. You don't need to refer the concept anyways. Yeah, which we discussed. You can always go refer that. Yeah, question itself is telling you. Next is the debtors. So the question says debtors should be the one which are only up to 90 days. So do you have the value of debtors up to 90 days? No. But you have the value of total debtors and debtors greater than 90 days. So from the total, what do you need to do? Debtors exceeding 90 days, you need to exclude. Correct? So what do you get? 40 lakhs. Further on the debtors balance, once again, you need to keep a margin of 40%. So if you keep that margin of 40%, what do you get? 24 lakhs. Okay. So in relation to debtors, the balance for drawing par can be 24 lakhs. Yeah. So the amount of drawing par against the debtors could be 24. And the drawing par needs to be calculated based on both stock and debtors. So that's why what should you do? Add both these amounts, 52.5 lakhs and 24 lakhs. So therefore, what do you get? 76.5 lakhs. Okay, so that should be the amount of DP. That should be the amount of drawing power. Okay, so in this case, is the calculation of CAPE correct? Answer is no. His calculation is not correct. Yes or no? So what will you say? Calculation of CAPE is not correct, right? Okay. Any questions on this? See, in the exam, you may have questions like this. So any doubts, if you have, please let me know. Rihanna is asking, are the questions? Yes, of course. Of course, you can have such questions. And you should be quite happy if you get this question. Why? Because it's very straightforward, simple sort of calculation you need to do, and you get full marks against that. Yes or no? Yeah. So that becomes so easy for you. Okay. In fact, you should appreciate such sort of requirements if at all those are there. Any more questions if you have on this? Anything else? Quickly. Any questions? Any doubts? No? All right. So now what we will do is, now we will try to understand the auditor's aspect. See, as an auditor, now we need to understand what is going to be the role of the auditor. Because this DP calculation, basis of this DP, auditor will not be doing this. Who will compute this? Management. So in this case, if let's suppose you were the auditor of this bank, okay, you are the auditor of this bank. So what could be your concern? One can say that one of the concern of the auditor will again be to check this calculation. I would say that is not going to be an important concern. Of course, that is going to be one of the procedures, no doubt. But will that be very important? What do you think? If let's suppose you were the auditor of this bank, do you see any significant concern as regards this drawing power computation? Tell me yes or no and why. Over to you quickly. Quickly, what do you think? And why do you think that? Quickly, huh? What do you think and why do you think that? Over to you quickly. Any thoughts on this? I was saying about stock details status. No, of course. So that's one of the points we need to look into. But I'm saying as an auditor, this calculation of drawing power, should that be a significant risk area? Should that be a significant concern for the auditor? Shreya says no. Rihanna says if it is to be made as a disclosure, then the valuation is important. I agree. I agree. Now, in this case, let's try to understand some points which are associated with this. Okay, which is something the auditor needs to focus upon. See, in case of a drawing power, actually, if you look at that drawing power, okay, so broadly we can say three areas are attached to that. One, that is stock. Second, that is debtors. And third, let me just say, is the computation. Okay, and I'm talking about a bank, not the borrower. I'm talking about the bank. See, for a bank, considering the kind of systems they use, considering the kind of controls they have, okay, banks are all on the IT platform, IT environment. Yeah. So therefore, definitely this competition needs to be checked. But do you expect the banks will be making a lot of errors in these calculations? See, the risk is there, but that's not a significant risk. So I don't find this to be a significant risk. Okay. So I won't call this to be a significant risk. But what could be a significant risk may be in relation to the stock or the debtors. So what's that? See, there is a concept of GIGO, garbage in, garbage out. What does it mean? That your output is dependent on the input you provide. Yes or no? So this calculation is based on what? Is based on stock and debtors. Or you can see the details of stock and debtors. If the borrower provides wrong details of stock, of the debtors, or either of these, then what will happen? Even if arithmetically you have computed it correctly. So when you are looking at the computation, what are you checking? You are checking whether the formulas are correct or not, whether the margin has been considered appropriately or not, whether the inputs have been rightly filled wherever required or not. But in case the value of stock should have been 10 crore, but the party has fudged the details and the party has shared the stock value of 20 crore. So this computation will go wrong. Yes or no? Yes or no? So that's why the bigger concern for the auditor would lie not in case of competition, but in case of the value of these stock and debtors. So that's where auditor needs to focus upon. And that's where auditor needs to apply his audit procedures. Understood? Understood? Yeah. So the stock statements which are produced, the debtor details which are produced, that is what auditor needs to verify. Okay. And how will the auditor verify that? On the basis of the information and wherever required on the basis of the supporting documents. In this case, there is another aspect which the auditor can always consider. Okay, and that's a very, very logical thing. See, generally, these details are required to be provided by a party on a monthly basis. Okay, so bank has a requirement. Okay, in some of the cases, party has to provide this on a monthly basis. So April, May, June, July, August, September, every month end the party has to provide. In some of the cases, it is required to be provided on a quarterly basis. Okay. Further, over and above these monthly statements which the party will provide, party is also required to provide a consolidated annual statement, which has to be the audited one. So let's suppose if there is a company A Limited, every month it is sharing some details. So what can the auditor do? Auditor can check whether all of these amounts are appropriately captured in the annual details or not. Why? Because the annual details which are provided, they are audited. Yes or no? Yeah. So some sort of that correlation wherever possible can also be looked at by the auditor. Okay. Yeah. So I would say that will be a bigger requirement. That will be the more important requirement as compared to just getting into the calculation, because by just getting into the calculation, auditor will not be able to address the bigger concern or the bigger risk. So the bigger risk lies in case of these details. Okay, clear everyone? Yeah. All right, so then I think there is one more query from one of you, and that is about mode of security. Correct? So mode of creation of security. Now, as we discussed about the security, in this particular example, if you look at, stock is a kind of security, debtor is a kind of security. Similarly, there could be another security, a property. Yeah, so some of these are what securities. Now, there are different ways in which a bank or the customer, so A Limited for us is the customer, they can enter into a contract. Okay. So different terms and conditions could be set up between these two parties. Yeah. And depending on the terms which are specified, you can say there are different ways through which A may provide security to the bank. Objective is what? To make the bank secured. And that's what the bank will always want to achieve. Okay? To become more secure. Yeah. In fact, more and more secure. Now, there are different ways. In some of the cases, you call it as mortgage. In some of the cases, you call it as pledge, hypothecation, okay, assignment, set off. So I'm just reading some of these terms. Now, please understand that all of these ways, all of these modes, they are what? They are the legal arrangement. Okay, so you can say it's the legal aspect. Objective is what? Whether it's a lien, whether it's an assignment, a security is being transferred from customer to bank. Okay, so that I believe is more important for you rather than getting into the legality of the way of creation of security. That's one. Okay, further, in relation to any specific aspect, okay, I remember, I think Shreya asked me about this hypothecation. So let me just go back to this hypothecation once. Okay, and let's try to understand as to what do you have in case of hypothecation. Okay. So there again, if you look at this hypothecation, a charge is created. What does it mean? A security is provided. So how do you create this security? By creation of an equitable charge. So you can say both the parties will enter into an agreement wherein it will be written there are charge on the asset. Let's suppose it's the property. So it will be specified that on the property a charge will be created in favor of the bank. Okay. So what do you call that agreement as? Hypothecation agreement. As simple as that. In this case, does it mean that the ownership or the possession of that property will get transferred to the bank? No. It's only a charge. Okay. Or you can say legally you have specified somewhere that a charge on this property will remain with the bank. Now you may be thinking, sir, what is the meaning of this charge? Nothing but a security against the loan taken. So as and when the loan will be repaid, this charge will be removed automatically. Okay. Borrower periodically submits statements regarding quantity, value of assets to the bank. Okay. So this is what you call as hypothecation. So in this case, if you read, it appears to be three paras. Yes or no? So if you read this, you may be thinking, sir, there are three paras for this. But actually, in a very, very simple form, you can say it's a kind of security transfer, wherein on the agreement, you will use the word creation of charge. And creation of that charge doesn't mean transfer of ownership or possession. It only means that a security is being transferred against the loan provider. Okay, clear on this? Shreya, clear? Does it help? Tell me quickly. Does it help? All right, great. Any more questions, any more doubts? If you have, please let me know. Then I think we'll take a break. Yeah. So after the break, we will continue on this. Any questions, any doubts if you have? No? All right. So let's take a break now. Yeah. So Bhargav, let's take a break. All right, so let's continue on this. Okay, so now what we will do is we'll just look into some more questions. Huh? So I think we have got this sort of case study. Okay, so let's look at some questions. Okay, so let's look at this case scenario. CAM is conducting statutory audit of branch of MMC Bank. Okay, so it's the branch. During the course of audit, it is noticed as under loans under Kisan credit card are given by bank to farmers to meet their short-term credit needs for the cultivation of crops. In respect of one agricultural advance classified under Kisan credit card having an outstanding balance of 20 lakhs at the year end, there is no transaction in the account since last 90 days. The said loan has been granted for cultivation of paddy, which is harvested in a period of 3 to 4 months from sowing. The branch has classified the said advance as standard asset. So I think in this particular case scenario, the questions that you are going to have, you will require the understanding of the classification, provisioning, etc. related to advances. Okay. So just try to apply those thoughts. Further, it is also observed that account of one borrower availing cash credit limit of 50 lakhs was taken over from another bank. Taken over means it was with, say, XYZ bank. Now it has got shifted to MMC bank. Proposal was sanctioned by the branch manager instead of immediate next higher authority as required in the manual of delegation of powers of bank. Third, it is noticed that head office of the bank has flagged a savings account maintained in the branch in which interest was wrongly paid at a higher rate due to wrong data feeding entry. Now, situation has been rectified by debiting excess interest paid in the account. Since there was a little balance in the savings account, a debit balance of rupees 1,50,000 was created in the said savings account due to above reversal. The matter was immediately informed to the account holder. However, he has not turned up for payment since the matter was informed to him about 6 months ago. Next, there are many cash credit accounts in the branch. Such borrowers are required to submit monthly stock statements to the branch for the calculation of drawing power. Next, fifth observation. One borrower has availed a housing loan and a car loan from the branch. So both the loans have been availed. Housing loan EMIs are overdue for 120 days. Car loan EMIs are overdue for 60 days. Okay. So as at the balance sheet date. Yeah. So I think these observations you have understood. Okay. Now, based on this fact pattern or these observations that we just discussed, you need to answer these questions. First, as regards description of agricultural advance, which of the following statements is most appropriate? First, branch has erred in making classification as per RBI norms. It's a substandard asset. Second, classification made by the branch is proper. However, there are no transactions in the account since last 90 days. So it is SMA. Remember SMA? Third, classification made by the branch is proper. Fourth, branch has erred in making the classification as per RBI norms. It's a doubtful asset. So what is your thought? Over to you. On the first one, which one do you think will be the correct answer? Over to you. Over to you. Out of these four options, which one you think will be the correct one? Quickly, quickly, tell me which one of these options will be the correct one. Over to you quickly. What do you think? So if you want, you can just go back to the case scenario. I'm sure you'll have access to this study. Okay, Tanu says B appears to be the correct one. Okay, what about this? What about this? Quickly, what do you think will be the right option? Only one response so far. Over to you. Tell me quickly. See, in respect of this loan which is given to the farmer. Okay. So when do you classify this as non-performing? If this is overdue for one crop season, remember when it is for short term. Okay. Yeah. So in the given case, will you say it's overdue or non-performing? Answer is no. So where do you present it then? Standard asset. Standard asset. Okay. So that's why for this classification made by the branch is proper. Next, regarding the taken over account from another bank, which one is correct? It's an internal issue of the bank and auditor is not concerned with it. It's an internal issue of the bank. However, auditor may at his discretion report it. Means auditor has a choice whether to report or not. Third, it's a serious violation of laid out procedures of the bank for sanction of advances and should be reported by the auditor without fail. There's no issue involved as credit facility was properly sanctioned. What do you think? So if you look at this second situation, in this case, proposal was not sanctioned by the required authority, but by a person below that. So therefore, which out of these four options you will consider will be the most appropriate one? I think this is more of logical. Just think about it logically. In fact, you don't need to get into the legal requirement here. Tell me. Over to you. Over to you quickly. Okay. So now Shreya says option C. That's correct. Yeah, C is the correct one. Why? Because see, for a bank, these policies, procedures, delegation of authority, these are very important. Breach is not acceptable. Tanu is also saying C. Yeah. So in this case, what had happened? Proposal was sanctioned by branch manager. Delegation of authority required. His senior should have approved, but that approval is missing. Yes or no? Yeah. So this could lead to a fraudulent scenario also. Okay. So that's why it's a serious offense. Third, as regards debit balance of 1.5 lakhs in the savings account. So what had happened? Bank first of all gave the credit to the customer. Customer must have withdrawn, and now the balance is not there in the savings account. So the bank is chasing the customer for the money, but the customer is not responding. Okay. So now in this case, situation doesn't attract RBI norms on asset classification. This debit balance of 1.5 lakhs should be NPA. Third, Situation doesn't attract RBI norms on asset classification as no credit facility was granted. So I think A and C are same. Bank cannot demand excess interest paid to the account holder. I think once again, if you think about it logically, you'll get the answer. You'll get the answer. Shreya is saying B. What about others? It's more of logic based. Yeah. Almaz is also saying B. Very good. Tanu is also saying B. Yeah. And that's the logical answer on C. Yeah. Next, fourth. Which of the following is not true about drawing par? I think about drawing par we have already discussed quite a lot. So I'm just hoping everybody should be able to answer this. Okay. Drawing par refers to the amount calculated based on primary security less the margin. Drawing par is always less than sanctioned amount. Drawing par can be different from sanctioned amount. Different means it can be less, more. Creditors for goods are reduced for purposes of calculating drawing par. Over to you. I think it's the most simple one. Tell me. Julie says B. Almas says B. What about others? Shreya is also saying B. Very good. Yeah, because that's the correct answer. Right? Right? All right. So now, last one. Okay, Dhanush, Anil, they also answered this. Very good. Next. Considering the housing loan and car loan were availed by a single borrower. Please remember, if there is a single borrower availing different types of credit facilities. So there is a requirement on the asset classification, on the provisioning norms. First, both housing loan as well as car loan should be classified as NPA in accordance with RBI norms. Second, housing loan should be classified as NPA. However, car loan should be classified as standard. Third, car loan should be NPA. Okay. However, housing loan should be standard. Fourth, both should be standard. I think this is also quite straightforward. This is also quite straightforward. If you think about it logically, I think option number D clearly is incorrect. Yeah. So let's try to think about it. Option number D is clearly illogical. So D is not possible. Then if you look at the loan, yeah. So knowingly that housing loan is overdue for 120 days. Okay. Housing loan is overdue for 120 days. Option number C also doesn't seem to be logical. Correct? So very clearly option number C and D need to be excluded. Very clearly. Yeah? So straight away you will exclude these two, C and D. So the only two options that you are left with are A and B. I think which could be a point of confusion for many of you. If you don't understand that legal requirement, if you don't understand that provisioning norm. Okay, so the one that we discussed other day. Yeah, so but once again, the idea is just to help you understand that when it comes to some of these options like this, so you can just always filter out some of these options this way. Yeah. So if at all you will not remember the legal requirement, at least your confusion will not be over phone points. Your confusion will be on point A or B. So that's how you need to approach this. Yeah. And in this case, of course, the correct answer will be A. Yes or no? I think this is the response which I received from Tanu, Almaz, I think Dhanush as well. Julie, very good. Okay. Yeah. So the moment you consider NPA, please remember It's not the credit facility that you consider NPA. It's the borrower, because the borrower has to repay the loan. Credit facility will not repay the loan, right? So every time, what do you need to check? Whether the borrower is good or not in terms of ability to repay. So that's how you need to look into it. Okay, clear? Any questions? Any doubts so far? Quickly. Any questions? Any doubts so far? So with this, what we have done is we have discussed the advances. Now what we need to do is we need to move on to the P&L. Okay. Now in relation to the P&L, okay, there are some areas which are important, critical for one to look into. But before we get on to those areas, let's once again flip through the P&L. Okay, so let's flip through the P&L. So this is the audit report. We'll also see if we can just go through this. Okay, so the balance sheet we have already considered. Now let's look at the P&L. Now for a P&L, once again, one, the format is defined. Second, this P&L will again have a couple of components. Yeah, if you look at the key components, the major one, it has to be, of course, the income, no doubt, which is nothing but the revenue for a bank. And which income will that be? Interest earned, because this is the core activity. Correct? So this will always be the major chunk, the significant one. Second will be the interest expense, of course. Okay, interest expense. So this will be the second item. And this is something which can also link to the balance sheet. So if you go to the balance sheet, where do you get this interest income from? Advances. And where do you need to pay this interest expense on? Deposits. Yes or no? Yes or no? Yeah. And even in case of a balance sheet, we discussed these to be the most important areas. Correct? Yeah. Further, because it's a bank. Okay. So that's why a lot of provisions are required to be created. So that's why you have this line item provisions and contingencies. And from the net profit which the bank will generate, what do they need to do? They need to create a lot of reserves. Okay, all of these are what? These are all statutory requirements. It's again a very, very common feature for a bank. Okay, creation of all of these reserves. Fine. Okay, so now what we will do is we'll look at some of the terms, some of the concepts which are associated to these advances, and we'll also try to look at the procedures which you get to see in case of this P&L from the income part first of all. Okay, so this is the format which is available, but I think we have looked at the actual financial statements, the P&L. Okay, so first, interest earned. Now, for this interest earned, what we can also do is we can look at the split. So we can go to this note number 13 and 14, wherein you will get to know about the complete details as to what will you have in case of interest earned. Okay. So now let me just go to these notes. I think I have moved slightly ahead. Just give me a minute. All right. So here we have, yeah. Idea is again to look at as to what all items you'll see in the P&L. So you have one interest on advances. Then on the investments, you'll have some income. Okay. Any balances with the RBI, any other banks which are maintained. So they will also fetch some interest income. And anything which doesn't fall in this category, others. Okay. For example, in this case, the nature of others is specified. Then you may have other income. Now, what is going to be this other income? It could be commission, brokerage. So banks are involved in all of these things. Yes or no? Investments which are sold, profit or loss on that. Investments which are unsold, but which are revalued. So any gain or loss on revaluation. If the bank has sold any other asset like land, building, okay. Bank also enters into various instruments which are called as derivatives. So if there are any gains or loss on that, if the bank has earned any dividend, okay, if the bank has earned any rental income, all of these are what? Other income. Yeah, because these are not the core areas. Core areas will always be the two: advances, which the banks will give, investments, which the bank will have. Okay, so these are the two things, right? Now, let's try to look at the audit procedures. Okay, so same way in the study material, you have this complete split of various components which could be there in other income and the interest earned. Now, what are going to be the audit procedures? Now, as far as this P&L side is concerned, okay, so in relation to this P&L side, particularly on these two aspects, interest earned and the other income. Please remember, this will be the most important area. Okay. Why would this be the most important area? Because it's something which is linked to advances. And because advance is the most important area, so that's why any return is linked to that. So it's a cycle actually. Though we are looking at it separately over here, but it's a cycle. So when you audit advances, you also audit the return on those advances. So correct? Yeah. So in this case, because you are looking at the revenue, in a way in the form of interest income. So that's why it's going to be a significant risk area for the audit. There's no doubt in it. Because it links to advances, so that's why all the concerns which are there in case of advances will have to be also looked at in respect of those returns. So for example, RBI classification norms, RBI norms related to income recognition. Remember, RBI norm says if there is an NPA, income should not be recognized by the bank on that. So whether the bank has done that or not. Correct. Materiality. Materiality, anyways, we understand is very, very important to be considered, particularly in case of large entities like a bank is. It becomes important because if the auditor will not consider a threshold, then the banks may have a lot of items, a lot of transactions, say running into lakhs. But will that be significant considering the size of the bank? Answer is no. Okay, so therefore this area plays a very, very important role as far as audit procedures are concerned. Okay, now in relation to the advances wherein the securities are provided. So when you consider the recognition of interest, okay, so of course you will consider it, but therein you will also have to consider the factor of security because these are secured. Okay, so unlike in case of unsecured, what do? You just simply consider the entire amount as NPA. But over here, you will not call that entire amount as NPA because any sort of security which is available, that is not NPA. The only part which is unsecured will be considered as NPA, and therefore the income recognition that you do will also be in accordance with that. Correct? Yeah. So this actually applies to various areas. Okay. Now, reversal of income. Now, this could be an important area for you to understand. So, what is this reversal of income? See, if there is any advance, it becomes NPA. So, entire interest accrued, you will reverse. Yes or no? Now, what do you mean? Say from 1st of April to 31st of December. Okay. An advance was tendered. So will you recognize interest on that on an accrual basis? Tell me. Will you recognize interest on that advance on an accrual basis? Shreya says yes. Okay. Now, let's suppose up to 31st of December, this interest on such advances is say rupees 60 crore. Okay, let's suppose 60 crore has been recognized. Now, let's suppose in the month of March, what do you find? In the month of March, you find that such advances have become NPA. Okay, so now what will you do? For an NPA, you will say, okay, if these are NPAs, so I'll not recognize interest income on that. Correct? Fair point. But what about the interest income which the bank has already recognized and which the bank has not yet received? Okay, so we discussed that the income can be recognized on receipt basis, cash basis. So this 60 crore income up to December. Okay, let's suppose out of that 60, 50 crore is still pending. So 10 crore is received, so we'll let it remain. So what do you do with that? So you may have a thought that, okay, fine. So we'll stop recognizing the interest income on a go forward basis. So after December, or let's suppose starting from March, we will not recognize any interest income. That's correct. But any income which is already recognized and which is not yet received will also have to be reversed. Okay, that will also be required to be reversed. So therefore, what will you do? Therefore, you'll have to keep a track of all of those NPAs. Okay, and such type of reversals of the incomes which have been earned but not received, you also have to keep a track as an auditor whether those have been reversed or not. Clear? Clear on this? Yeah? Everyone clear? Okay. Now, in respect of NPAs, fees, commission, similar income that have been accrued should cease to accrue. Okay. And if those are uncollected, those need to be reversed. In case of banks which have wrongly recognized income in the past, should reverse the interest. It was recognized during the current year or make a provision. Auditor should inquire if there are any large debits in the interest income account that have not been explained. Why? Because it may happen that there are some differences which are taken out, which are recorded over there. Yeah, which is something unusual. Yeah, so that's why auditor needs to focus upon that aspect as well. Then, on the leased assets means assets which are given as leases or on rent. There again, the lease income needs to be recognized. Again, depending on the accounting requirement, it's a finance lease or operating lease. Okay. Then on takeout finance. Now, what is this takeout finance? It appears to be a new term. Yes or no? So let's understand this. Takeout loan is a method of financing whereby a loan that is procured later is used to replace the initial loan. More specifically, takeout loan or takeout financing is a long-term financing that the lender promises to provide at a particular date or when particular criteria for completion of a project are met. Okay. In case of takeout finance, if based on record of recovery, account is classified by the lending bank as NPA, it should not recognize income. Something on the similar lines. Okay. So it is again a kind of finance, or you can say an advance which is given. So there again, if you have to recognize some income, it should not be classified as NPA. Now, what if there is a partial recovery in NPA? If let's suppose there is no clear agreement between the bank and the borrower for purpose of appropriation of recoveries in NPAs, banks are required to adopt an accounting policy and exercise the right of appropriation of recoveries. Okay. Now, which has to go in line with the accrual concept. Interest which is partially or fully realized, that will obviously be taken to income. Yeah, but only the portion which has been realized. Any other credit should not be considered. Yeah. Next, memorandum account. Now, what is this memorandum account? Again, it's an interesting concept for you. Okay, so let's try to understand about this memorandum account. On an account turning NPA, banks are required to reverse the interest which is already charged. Why? Because that will be recorded on cash basis. However, banks may continue to record such accrued interest in a memorandum account for control purposes. Okay, so now let's try to understand this. See, memorandum by its very meaning, we understand, is a kind of draft account. Or you can say it's a kind of rough working. Okay, so it's that sort of thing. So let's try to understand this. Say the bank has got some advances. Say the advances are worth of any amount, say X, on which bank has accrued interest of 60 crore. Say this is the situation up to 31st of March 2024. Okay, but because these advances are NPAs, so can the bank recognize this income? So I think there was some disconnect. Yeah. Okay. So let me just take you back to the example we were discussing. Okay. So we were discussing about this example that a bank has got some advances and these advances have become NPA. Okay. On these advances, bank has this income of 60 crore. Okay. So this is the accrued income. So tell me, can the bank record this income? Over to you quickly. Can the bank record this income? Can the bank recognize this income? What do you think? What do you think? Can the bank recognize this income of 60 crore? Over to you quickly. Tell me, what do you think? Can the bank recognize this income of 60 crore? Rihanna says yes. Can the bank recognize on NPA? Please understand that there are advances of rupees X and these are NPAs. So on NPAs, can the interest income be recognized? Tanu says no. Okay, but what is the rationale behind non-recognition? What is the rationale? Rationale is very simple because the bank is required to be conservative. Yeah. So on the basis of prudence, you can say. Okay. And the requirement is that as and when you receive it, you recognize it. Okay. Now, if let's suppose you were the bank, if you have not received this 60 crore, so you will not record it. But will you need a record of this or not? Somewhere you will have to keep a record of this, and somewhere you will need a record of the interest for each year or not. Otherwise, will you be able to recover this amount from the customer? Answer is no. Answer is no. Yeah. So the bank can't record that in its books, but somewhere bank needs to have this record. If the bank will not keep this record, then the bank will not be able to realize this money ever. And that will be the actual loss. Currently, it's not the actual loss. That will become an actual loss. So that's why for such type of incomes, what would the bank do? Bank will prepare memorandum account. You can say these are some sort of rough workings or some methods of recording, or you can say it's the mechanism to keep a record from which it will not flow to the books of accounts. Idea is to keep it away from books of accounts. Yes or no? But of course, the record has to be there, right? The record has to be there. So idea is not to not keep the record at all. Record has to be there. The only thing is the record should not be there in the books of accounts. Okay, so this is what you call as memorandum account. Fine. Now, moving further. So let's look at some other items in the P&L. Now, what are the other items in the P&L? So, of course, we talked about the income side, interest earned and other income. Now, the other items will be all about expense. And the biggest chunk will always be the interest expense. And we discussed that this expense has to be there on the deposits which the bank would receive. And if the bank will also have some borrowings. Yes or no? Other than that, bank will also have some other expenses, operating expenses or provisions, contingencies. Now, provisions and contingencies will again be an important area, but this provision and contingency, as we discussed, will also be linked to the advances. Correct? Because all components which could be there in respect of these expenses. So here again, what we will do is we will get into the balance sheet of the same bank. So now what is this interest expense? It could be there on deposits, any of the banks from which the bank has borrowed. Many a times the bank will also have the money borrowed from RBI on which interest will have to be paid, or if there are some other interests. Okay, then operating expenses, a lot of other expenses. So bank, like any other entity, will also have a lot of other expenses. Those are called as operating expenses. For example, salaries, rent, okay, printing stationery, advertisement, depreciation, okay, directors fees, auditors fees, legal charges, postage, repair, all of these. Okay, something which you get to see in case of any other company under employee benefits expenses, depreciation, okay, or other expenses. All of these are now clubbed together under one single head, that is operating expenses. Okay, fine. Then the third category was about the provisions and contingencies. And I think we talked about it. So that's something which we'll see in case of advances getting netted off. Yeah. So we'll have to go back to that schedule of advances. So now, as around these items, now please understand that these items are not new. Yes or no? So these items are not new anyways, except for the interest, one can say. So therefore, some sort of procedures that the auditor will apply, for example, audit of legal expenses. Okay, for example, audit of employee cost. What are going to be the audit procedures? Same. Okay, so these are no different from what the auditor will get to see at any other place. Yes or no? Yeah. So these are no different from that. The only aspect could be about the interest expense. So let's try to look at some audit procedures on the interest expense. See, for the interest expense, what should be the biggest worry for the auditor? Completeness. Correct? The biggest worry should be what? Completeness. To ensure that the expense has been recorded completely. And how will that completeness be ensured? By ensuring that all the items on which interest needs to be recognized, whether all those line items have been considered or not. So that's going to be the first check. And then, of course, the calculation on that. And for the purposes of interest expense, the most appropriate method on the part of the auditor will be what? Recomputation. Yes or no? Yeah. But now, once again, a question will arise that for a bank, will the auditor get into an Excel calculation? So when you say the auditor will be required to recompute, so will you pick up some samples? Answer is no. So if you don't recompute on a sample basis, if you want to recompute this entire interest, so how do you go about it? So will you obtain this working? And if you obtain this working, so will that working be obtained in an Excel file? There again, no. So you will not be obtaining that in an Excel file. Why? Because if you get onto an Excel file, that may again not be possible. That may again not be appropriate. Yeah, considering the quantum which is involved. Okay, considering the complexity which is involved. Why? Because these days the volume is so high, and anyways, for a bank, for this type of expense, the volume is going to be quite significant. Correct. So therefore, in such a case, the auditor will have to involve the IT expert. So the IT systems which the bank is using, because even if you look at the bank, of course, this interest calculation has to be done by the bank also, management also. So how will the management be doing it? So these days, all of these things are automated. Yeah. So auditor will therefore have to draw the comfort on the systems. Because if the systems are working in an appropriate manner, then the calculation which is getting generated out of that, or you can say the report of interest expense, which you pull out from that particular system, should be completely okay. Yeah. So that's why in this case, considering today's environment, what is going to be the most important procedure on the part of the auditor? Once again, will be the systems. Okay. The system which the bank is having means the automated system which the bank is having, wherein the involvement of IT experts will be required. So if the auditor will draw the comfort on the process, on the system, then of course this aspect is taken care of. Second procedure could be in relation to the analytical. Yeah. So analytical procedures are the procedures which are generally used in relation to the completeness. If let's suppose interest expense has been increasing in proportion to the benchmark or in proportion to the underlying curve. Okay. So therein analytical plays an important role. So let's try to understand as to how an analytical can help the auditor. Say last year, deposits which the bank received, say were 100 crore. Okay, current year deposits which the bank has received are 110 crore. Okay, now in this case, if let's suppose bank paid an interest of 3 crore. Okay, so this is the amount of deposit. Let's suppose last year bank paid an interest of 3 crore. So what does it mean? On an average, it was 3% of the total deposits. Yes or no? Yes or no? Tell me. So it would indicate that on an average, it was 3% of the total deposits. Correct? Correct? So it was 3% of the total deposits. Now, if let's suppose auditor wants to ensure completeness, so through analytical, what is it that the auditor can do? Auditor can first of all apply the same percentage to the current year's population. So you can say it's the overall population or the basis, because this is the cost driver. So you can say it's the driver of the cost. Yes or no? So in this amount, interest cost needs to be computed. Correct? Interest cost needs to be computed. So if you apply 3% on 110 crore, what do you get? Can you tell me? What do you get? If you apply 3% on 110 crore, what do you get? Over to you quickly. Can you compute this? Great. Tanu says 3.3 crore. What about others? Have you computed this? 3.3 crore. Okay. So that means for the current year, auditor can draw an expectation. So this is what is called as drawing an expectation. I think Anil has got the same answer. So auditor can say that for the current year, my interest expense should be 3.3 crore. Now let's suppose during the current year, actual expenditure is say 3.5 crore or say 3.1 crore. Now in this case, what will the auditor do? Auditor will discuss that with the management. That if you go by the percentage of interest rate, yeah, so interest rate which was there in the previous year, if you go by that, then the amount should have been 3.3. But if that is more than that, lower than that, so how is that possible? So the management will explain that during the year, maybe after April, the rate was reduced. Okay, maybe after May, the rate was increased. So that sort of calculations the auditor need to change. But broadly, you can say on an overall basis, will the auditor get a comfort over this entire amount or not? Tell me through this procedure. Yes or no? Yeah. On an overall basis, will the auditor get a comfort on this or not? The answer is yes. Yeah. So that's where analytical will help the auditor in respect of performing the procedures on such large items. Okay. And these are some of the very common methods of audit which are adopted by audits. Okay. Then I think the other items could be in relation to different areas of the P&L. So as we talked about all of those different areas related to the P&L. Okay, so when it comes to the rent, of course, you'll perform the testing on a simple basis. You'll look at the rent agreement, depreciation. So how do you do that? You'll get into the calculations. Yeah, so all of these line items, repair and maintenance, the auditor's consideration should be that nothing related to the capex nature should go to repair. And of course, on a sample basis, this needs to be tested. Insurance. So nothing in the nature of prepaid insurance should have been taken to P&L. Correct. So these are some of the considerations which the auditor need to have in place. But all of these are not considered to be the significant risk areas. So the significant risk area, as far as this P&L will be concerned, will obviously be on the interest expense side and will be on the provision side. And the provisions, as we discussed, will be all linked to the advances. So they will all be generated on the basis of the consideration of the RBI norm. So that's the way auditor needs to think about it. Okay, so now I think we have this summary, but I think this will help you maybe later on, or otherwise you can just flip through the P&L of any bank, okay, just to get some understanding around it. Moving further in relation to the prior period item. So prior period item, we say is an error which has taken place in the previous year. Okay, so now this prior period item, so if you look at the requirements of the bank, so the format of P&L of banks does not specifically provide for disclosure of impact of prior period items. Okay, yeah. So such disclosures, wherever warranted, may be given. Anyways, this is considered to be an important area. Now, let's look at this question quickly and just try to understand, how will you perform certain audit procedures in respect of this area. You are verifying interest on deposits paid by the branch of a nationalized bank. So that means we are talking about the interest expense here. Okay, and I think this is something we have just discussed. Okay, so that's why I'll request everyone to participate on this. Discuss any two analytical procedures to verify the interest on deposits paid by the branch. Over to you quickly. I think this is quite simple, but at the same time, this is quite important. Please remember. So any two analytical procedures which you think auditor can adopt. Over to you quickly. Yes, quickly. Any two audit procedures. Only the analytical procedures we are talking about. Quickly, any two audit procedures. What do you think could be performed by the auditor? Yes? Okay, Anil says ratio analysis. Very good. Comparing previous year figures. Great. Yeah. So if you remember this way, of course, you can just elaborate on this in the exam. Rihanna says trend analysis. Again, very important and an important procedure which you can apply. Yeah. Third, as we discussed, that is about drawing the expectation and comparing the expected number with the actual number, inquiring for the same, or you can say some sort of reconciliation to be done against that. Correct? Yeah. So now, if you look at the answer, the auditor should obtain from the bank analysis of various types of deposits. Auditor may work out weighted average interest rate. Remember, we work out 3%. Auditor may then compare this rate with actual rate. Okay, inquire for the difference. So that's one. Auditor should also compare average rate of interest with the corresponding figures of previous years and analyze the material difference. Means compute the rate for current year, compute the rate for last year on the basis of actual amount. Compare these two and find out the difference therein, if there is any. Okay, clear on this? Yeah. So I think with this, we are through as far as this chapter is concerned on the audit of banks. So now what we can do is any questions, any doubts if you may have, we can discuss your questions, your doubts, and then I think we can just close this. Over to you. Any questions, any doubts that you may have? Yes, anyone? Any questions? No? No questions? Sure. So if you do not have any questions, I think then we can just close our discussion. Tanu is asking what is the meaning of consortium? Consortium, you can say, is a group. Yeah, for example, let's suppose you require a loan from a bank. Okay, so you may go to, for example, SBI Bank. At times, what do? You reach out to a consortium. Consortium means SBI, PNB, Union Bank. So three banks taken together, they will create a consortium and they will sanction a loan for you. Yeah, so this group that you have, this is what you call as consortium. Okay, so you can say something which you call as a group. Okay, in case of corporates, when it comes to higher significant amount of borrowings, generally this consortium works. Fine. Any more questions if you have? Okay, so if you do not have any questions, then I think we can just close our discussion. Anil has a query. Yes, Anil, I think you want to speak. Please speak up. Anil, if you have anything, you can just speak up. Yes,
Sir,
Anil.
in case of audit of advances, uh, is there any specific procedure like which is mentioned in this material? But what is the main risky area, like key area? I want to know.
In relation to advances, you're saying. In relation to advances, you're saying. Anil,
Yes,
you're
sir.
there?
Yes, sir.
Okay. See, Anil, as regards advances, okay, so this entire area, or you can say this line item advances as such, is a risky area. Okay, so this in itself is a big risk area. Why? Because this is a significant component on the balance sheet, and this is the core business of the bank. Okay, so anything which goes around that advances, I'll call it as a significant risk area. But even if one has to specify some of the key areas in relation to the advances, that should be around the regulations. Okay, in case of a bank, anything which is around the regulation is considered to be quite significant, and any non-compliances are taken up very seriously because RBI is involved. So that's why I would say some of the norms related to their classification, some of the norms related to their income recognition criteria, yeah, the ones that we discussed, you should always
Okay.
consider those to be the most significant one, because if you do not understand, if you do not apply those norms, then your provisioning may go wrong. Okay, so idea is not only about classification or this item in the balance sheet, the corresponding income that you recognize in the P&L and the corresponding expense in the form of provision that you recognize in the balance sheet may also go wrong. So that's why I would always consider all of those provisioning norms, all of those RBI norms attached to that advances will be the key area as far as audit of advances is concerned. And that is where the significant focus of the auditor will always lie. So whenever it comes to the bank audit, that is where the auditor always focuses upon. Okay,
Okay. Thank you, sir.
sure. Anyone else? Any more queries? Then I think Tanu asked me, sir, is it only in case of industrial? I would say not in the case of industrial only, it's in the case of corporate. Corporate means when it comes to the borrowings by the entities, generally the large corporates. So that's where you get to see this. Yeah. All right. So if we are through, then we can just close our discussion. Yeah. So thanks everyone once again for your time today. Yeah. Thanks so much.
Thank you, Achal sir. And students, today 10 out of 11 chapters have been completed of our syllabus, which is around 90 to 92% of your syllabus. Now only one chapter is left for completion of this batch. So the course will be completed on the first week of June. In the first week of June, the last class is on 6th June. So you have 3 months left for the exams after the batch. Okay, so you have plenty of time to revise the chapter, to cover the subject and revise each and every chapter. So do not do the selective study. Okay, study all the chapters. Don't do this that study this chapter and leave this chapter. You can easily cover all of your syllabus in this time. Okay, and when whatever you study in the day, revise it at the end of the day for the better retention. So whatever you revise at the end of the day retains in your mind for a long time. And now, since your next class is on Monday, you have Saturday and Sunday. What you can do is you can take May 25 attempt question paper and try to solve that. Since your 11th chapter is pending, so you can leave that the questions of chapter number 11, okay, which would be around of 8 to 10 marks. So out of 88 marks, you can easily attempt 70 to 80 marks paper. So try to solve that, and if you face any difficulty in that, you can reach us anytime. You can ask your questions through the BS Knowledge Portal app. And as we informed you earlier, both descriptive and MCQ type of questions are being asked from this chapter, from chapter number 10, Audit of Banks, in the paper. So practice both questions, okay, from case scenario booklet and model test paper booklet. And if you face any problem, you can call us at 0120 3045 925. And your next class is scheduled on Monday. See you in the next class. If you have any doubt, you can ask. Otherwise, we'll wind up this session. Okay, no doubts.
I can see one query coming from Tanu. I think you have already answered. She is asking if there are any queries related to the earlier chapters. So where do we go? Where do we ask that?
Tanu, you can ask your query through BS Knowledge Portal app, or you can call us at the number is 0120 3045 925. Okay. I'm mentioning the number in the chat for everyone. Okay, so you can ask your query regarding any chapter, or regarding auditing and ethics, the whole syllabus. You can ask us from by contacting us at this number. Okay, so thank you everyone. Thank you, sir, for this wonderful lecture.
Thank you. Thank you so much. Thanks, everyone.
Yes, Bhargav.